Good morning, traders. Welcome to the latest edition of Talking Bull. I'm Joe, joined by Jamie this morning. How you doing, Jamie?
Yeah, not bad, thanks, Joe. Had a nice weekend, celebrating in some nice warm London sun this weekend. It was a real hot one here. But
Yes.
yeah, having a good time. How was your weekend?
Yeah, lovely. Thank you. Much the same. Enjoying the good weather. So long may it last.
Nice, yeah, good stuff.
Okay, cool. Let's start off the week then. So we're going to go through the latest headlines. We're going to talk about various markets and charts and how they're setting up for the week ahead. Look at what's coming out data-wise, and also play a little game with picking some trade ideas for the day ahead. So get stuck in with the latest headlines first of all. So solid increase in the US payrolls and participation rates dip. This was the non-farm payroll number that was due out on Friday, which is obviously one of the most well-watched data points of the month. The US non-farm payrolls increased 372,000 for June after a revised 384,000 increase in the previous month. This was above the consensus forecast of 265,000. So strong numbers there. All sectors recorded an increase in jobs on on the month, with a 29,000 gain for manufacturing and a rebound in retail jobs. The unemployment rate held at 3.6%, and there was a small decline in participation rate as the labour force survey recorded a decline of 315,000 in the number employed. In terms of the Fed, still uncertainty with regards to how they're going to tackle the interest rate rises. The Atlanta Fed chief stated that the economy is starting to slow down, and that is what is needed. He did, however, add that the labour market still has a lot of momentum and that he was supportive of a 75 basis point rate hike at the July meeting. The New York Fed president stated that there should be a debate between 50 and 75 basis points and expected rates to be between 3 to 3.5% at year end. In terms of the US Treasury yields, they overall lost ground on Friday, with the 10-year yield increasing to 3.08% despite the mixed jobs data. The yen's back under pressure. There was brief gains on Friday following the assassination of President Abe. The yen was then subjected to renewed selling on Monday as overall yields tended to remain on the downside. In terms of the Canadian jobs data, that reported an employment decline of 43,000 for June, which was well above the expectations of 20,000. And finally, in terms of the UK political situation, the latest Conservative Party candidates who have thrown their hat in the ring are expected to focus on potential tax cuts. And most of them have given their backing for that. So that'll be interesting to see how that plays out over the coming weeks. So that's that for the latest headlines. And now we can get stuck into some charts. If we first of all start with FX, just get the latest chart up for dollar index. No signs of this thing slowing down whatsoever. Back on the front foot again today. A little bit of signs of a reversal on Friday, posting a potentially a shooting star, but we are homing in again on the highs that we posted on Friday and look set to surpass those, up by 0.61%. So pretty much the best performing asset out there, as it has been for quite some time now. In terms of the next targets, we're looking for 108.74 on the upside, and then potentially an extension of that up to 110.25, which is 78.6% Fibonacci retracement of this entire move here. If we scroll back to the left hand side, it's going to take a bit more than that. We're going back to these levels here, which was last seen in 02. So pretty significant stuff. And it's a similar situation on Euro US dollar, but in reverse. Prices are at 19-year lows. If we look at where we're at today, we are, wow,
Still
we'll get
lower.
there eventually. We'll get there in the end. We are making, well, not quite new lows today. We did make a pretty big move to the downside on Friday, which then we saw a pretty decent rebound to form a hammer, but we're not getting any follow through. We're down 0.6% on that as things stand, so still looking for lower prices. And in terms of where we're looking for, it's pretty difficult to say. Let's have a quick look at the weekly just to see where we're at in context. So we've broken through this major support that we've discussed, and if we take a look to the left hand side, we've got some levels down here to potentially target. I swear I did have these drawn on the chart, but maybe they've been taken off. So into this kind of region maybe. Parity, I think, is the first level we're looking for, which is the 1 level, and we are not far away from that whatsoever. Did we even hit it last week? No, we got 77
Close.
ticks short of it. So we're keeping an eye on that this week. The big round number of 1 for euro versus US dollar. Taking a look at cable, that continues to hold around the lows, although we did see a improvement from the worst levels of the week last week. We are on the back foot again and threatening to take out these lows that we posted. And if that occurs, then we'll be looking for a move back down towards these lows that we posted in 2020 in March, down at 1.4098. So keep an eye on that this week. Still looking pretty pressured there. If we look at Aussie versus the US dollar, that's clinging on to this 50% Fibonacci retracement level as things stand. But if that breaks down, then there's a lot of space for this to move into on the downside. Take a look at New Zealand dollar versus the US dollar. That's breaking down, not quite taking out the lows that we posted last week, but you wouldn't back against it, that's for sure. Next level on the downside to watch there is a 78.6% Fibonacci retracement, which comes in at 58.96. Look at some of the other currencies linked to the dollar. These are weekly charts. We are looking at dollar CAD here. Big resistance forming at 130.76. Based on the dollar strength, you wouldn't back against that breaking out at some point, heading higher towards the 50% fib level at 133.40. If we look at dollar yen, no slowing there. The yen still remains very weak. And obviously, coupled with that dollar strength, we're seeing pretty significant moves higher on that, approaching 138 on the dollar versus the yen. And if we look, when was the last time we were back at that level? It was back in 98. So pretty serious stuff there on dollar yen at the moment as well. Okay, let's move it on to look at some of the other assets. Bitcoin. I'm going to start off with this. I was talking last week about this potentially breaking out to complete a double bottom. So we had a look on the Friday. Over the weekend, we didn't do an awful lot, but yesterday, say over the weekend, on Saturday, we didn't do an awful lot, but on Sunday, we started to see some cracks appear and this start to move to the downside. And this is being backed up again today, down 2% as things stand. So potentially, what we're going to see here is a retest of this upward trending line that we've got on the charts here. And if that breaks, then maybe what we're going to see is a continuation to the downside, which obviously wouldn't be good news for the bulls out there. So, well, difficult to predict really which way it's going to go, but a break higher and we could be looking for a decent correction higher based on a double bottom, but a break lower, then maybe we've just got a continuation, some sort of flag or pennant pattern forming on the daily chart and looking for an extension to the downside. So yeah, looking a bit 50-50, I suppose. But I mean, given these in normal circumstances, you tend to play this in line with the dominant trend, which is lower. So yeah, be wary of that. Similar situation with Ethereum, failed to overcome the resistance here at 1282. Potential for a continuation pattern to complete and for lower prices to be seen on the downside. So keep an eye out for that today. Moving on to commodities. If we take a look at oil, so potentially a head and shoulders formation here on Brent oil, rallied into the neckline of that pattern and failing today down by 1.6%. We've got measured move targets of the head and shoulders that come in at 85.97. So I think the game could potentially be up for oil in the short term and we could see a correction lower. If we look at WTI, that's rallied into resistance here at 101.07 and is stalling a little bit down by 2% as things stand today, potentially starting to round off a little bit here and create some sort of top pattern. So looking for prices as low as 86.40. When it's in that region, we'll see what sort of appetite there is from the bulls to potentially push things higher. But again, I think oil may have run its course for the time being. If we take a look at gold, we saw a breakdown last week below the 78.6% fib level, and it's still looking a little bit under pressure. I mean, it hasn't really gone anywhere for some time, but yeah, looking for a price movement towards 1676, which is a big support level here, and would just mean that gold's going to continue trading in this massive range. So Although it's struggling a little bit at the minute, overall it's not doing an awful lot. If we take a look at silver, that continues to hold around this big support zone here that we've highlighted between 1885 to 1870. As you can see here, these levels go back sometime back to 2020. So providing we can hold above these levels, then there is scope for a potential bounce there in the shortish term. Taking a look at copper, that really has fallen off quite a cliff in recent weeks. Bit of hope there posted with that bullish hammer candle on the 6th of July, but prices aren't really going anywhere since. The follow through has been pretty mild. So looking for lower prices there towards the 61.8% fib level at 313.71. Moving on to stock, sorry, not stocks, that's Jamie's area. Moving on to indices, stock indices. Looking at the Australian market today, under pressure, down by 1.3% as things stand. So we saw prices range in this kind of setup here. We broke below 67.57. We rallied into it to retest that level and failed. And we are seeing prices potentially head lower. So big red candle to start the week off as things stand. Again, similar sort of situation maybe to what we're seeing on the Bitcoin chart. So maybe it is the case that all sort of risk asset charts are looking the same. We've seen a bit of consolidation, a bit of a correction. If they fail to break above these levels here, then maybe we're just going to see some continuations to the downside. Taking a look at the German market, that's on the back foot today. We're posting an engulfing candle as things stand at the minute. It's very early in the session, so let's not get too carried away yet. But yeah, not looking like a great start to the week. A break below this level here at 12,431, and we could be seeing lower prices. 50% fib level, not too far away at 12,130. Below that, we could be looking for 11,150, which is the 61.8% fib level on the DAX. So not looking too good there. NASDAQ down by 0.9% as things stand. Again, similar sort of pattern that we're seeing on these riskier assets. So potential for a double bottom there, or potential for a continuation lower on NASDAQ. I think given that the overall trend remains pretty bearish, you wouldn't back against a move lower being created as a result of the break of this consolidation pattern here. And if that does occur, I think we'd be looking for prices as low as 10,500 on the Nasdaq. So still looking for lower prices on the tech giant or the tech index. Sorry, S&P 500. We've got a head and shoulders top pattern. We've seen that play out. We saw a retest of the neckline in recent sessions. Again, similar situation here where we've seen a bit of a consolidation, but potential for prices to break lower in the short term if it can't get above this resistance level here at 39.46. If we do break down here, then we'll be heading towards that 50% fib level, which we've highlighted at 3,500, and below that 3,333, which is the head and shoulders measured move target on the downside. So still looking pretty scary, I think, on these indices, and still potentially lower prices to be seen. It still doesn't feel like we've seen a big sort of flush out to the downside to clear out a lot of the the weaker hands here. So from my perspective, I still think we've got some significantly volatile days ahead and lower prices potentially.
Yeah, I tend to agree, Joe. Do you mind just quickly bring up the FTSE? We've had someone request a quick look at
Yeah,
that.
of course.
I didn't think you looked still ready, did you? Yeah.
Well, to be honest, the FTSE is a really difficult market. I mean, it's so range bound, and it's being propped up by dollar because it's got a lot of US listed names or dual listed names or companies that derive a lot of their revenues in dollar. So on a standalone basis, it's holding up really well. But in terms of opportunity, pretty limited, if I'm honest. I mean, if you look at this yellow line here, which is a 38.2% fib level, that's pretty much capped the downside moves, and the upside's been capped by this 76.87 level. So prices are just gyrating in between this at the minute, not really going anywhere. And if we look at this as a range, pretty much we are in the middle of that range and not really going anywhere. So it's pretty much one of the worst markets around in terms of trend. It's very directionless at the minute, but it's a pretty good shelter against some of these other markets at the moment. So what I like to do often is look at markets on a relative basis versus each other. So if we look at FTSE 100 versus the Nasdaq, for instance, then you can do this on TradingView by typing in the code of the FTSE, dividing it by the price of the Nasdaq. And if we bring up a chart here, the front pair, whatever pair you put first, is going higher here versus the Nasdaq, as we can see. So we've seen prices bottom out here. Really large bottom pattern has formed, and on the break here, now what we're looking for is outperformance on the FTSE versus the Nasdaq. So this is quite interesting. But looking at it in the shorter term, maybe there is a bit of a consolidation going on here between the Nasdaq and the FTSE. If that breaks lower, then that may indicate that the Nasdaq is actually going to start turning more positive. But if you look at the sort of long-term setup of this ratio chart,
Yeah.
Nasdaq was far outstripping the FTSE 100 for a very long period of time, and then prices have started to stall off. Another interesting chart I saw, actually, just looking at these ratios, was gold versus Bitcoin. Now, obviously, there's a long debate about Bitcoin versus gold, and is Bitcoin the new gold? But if you look at the two versus each other, let's just go to the market cap of Bitcoin. No, that hasn't worked. Let's try and find a better chart to look at. So we'll look at that, and we'll look at Bitcoin. So what we can see here on the daily, let's just go to the weekly chart. So for a long time, Bitcoin was obviously outperforming gold, and that's evidenced here by this chart, the ratio chart of Bitcoin versus gold versus Bitcoin. Sorry. So every time that was moving lower, that was gold getting pretty smashed against Bitcoin, really. So that was Bitcoin outperforming. But what we've seen in recent weeks is a bottom formation here of gold versus Bitcoin. So now we're in a position where gold is actually outperforming Bitcoin and formed a bit of a bottom pattern. So that may indicate that gold is going to continue outperforming Bitcoin. Now, gold isn't actually going anywhere as an asset. It's gone nowhere. But obviously, Bitcoin's decline has meant that this has gone pretty significantly lower. So maybe as a trade, if you were looking at owning gold, or you do own gold, or you're skeptical about Bitcoin at the moment, then maybe you want to actually do a pair trade where you have an equal amount of position on gold and Bitcoin. So you'd be buying gold and selling Bitcoin, which means you'd have a market neutral position. So you wouldn't be long or short overall, but you'd be looking to play this as a trade itself. It's often a strategy employed by institutions and could be worthwhile taking a look at. For me, it looks like we're going to see gold outperform Bitcoin, not necessarily gold move higher, maybe Bitcoin just continue to underperform. So I thought that was quite interesting. Bit of a tangent there, apologies if I've confused anyone, but Jamie, before I go any more off piece, I'm going to throw it over to you and you can look at some stocks.
No, thanks, Joe. Yeah, that was an interesting looking chart. And I think just before actually that breakout, there was a nice coil, which I always like to see at that point of breakout. So, no, thank you for that. We will jump into some stocks though, starting off with our biggest gainer and loser. And our biggest gainer on Friday's session is SRG, Seritage Growth Properties, up 80.26%. And we'll take a look at why this happened. Here we are. SRG sped to more than 80% gain on Friday after the Real Estate Investment Trust overnight said it will seek shareholder approval to sell its assets and dissolve the company, believing it may present the best opportunity to maximize shareholder value. So yeah, off the back of that news, up 80%. Not too bad if you're in on that. We were actually at this, I mean, almost to the tick. We could draw a little horizontal ray down here. From the COVID lows, we pretty much touched that perfectly and then went back up. So maybe there were some people trying to buy into that weakness that had a nice little move up. But yeah, 80% up for SRG. Upstart was the one that stood out for me on the downside though, and I know Upstart's one of those ones that a lot of retail traders are interested in, but you can see it's been really struggling for quite a while now. There's been quite a few gaps on the downside, and we saw another one on Friday. And I believe this was because of some guidance about Q2 earnings. Let's see if I did look at this earlier. I think here we go. Upstart fell almost 19% after lending platform company late Thursday says it now expects significantly larger Q2 net loss and less revenue than it previously expected. So just revising those estimates, and yeah, down even more. So I mean, it's been pretty rough time. You can almost get right from the IPO lows. Obviously, that's not joined up to the bottom, but it links up quite nicely with this low we recently saw. So that's pretty key level there, 25.67 on Upstart, but it's looking pretty fragile at the moment. Looks to be struggling. Looking at the market as a whole, this is the performance of the S&P for last week. So this represents 5 days of trading, rather than just the daily charts that we look at. And you can see it was a really good week overall, with the exception of energy and utilities to some extent. But Apple, Google, 8 and 10% respectively. Amazon up 8%, Tesla up 10%. So as weeks go, it was pretty strong in terms of price move. But as I feel myself been saying a lot recently, I do need to see a bit more of a bottoming pattern. I think what we're seeing on the Nasdaq has got a bit of potential to drive some of these stocks a bit higher, because we are getting that slight, even if it's quite short-term, bottoming. I know we're at a resistance level at the moment, so depending on how price interacts with that will kind of guide the larger market in my opinion. Let's jump into a few of these on a weekly chart then. So Apple we checked out last week a few times. We had this close above the last 2 weeks of trading, which is quite nice. So I'm thinking, where are the sellers going to try and hit this one again? The first point of call will probably be around this 38.2 fib level, this yellow line here, which has seen some selling in the past. And failing that, I think there's also, it's a bit messy, but you can see there is an area of buyers came in here, buyers came in here, buyers came in here. Will there be sellers waiting near that 50% fib? I think that's likely, but we'll have to see. Nonetheless, a really nice week for Apple last week. I've got Beyond Meat on here, which has obviously been battered pretty hard over the course of 2020, throughout 2021 and mainly into 2022 actually. But we are seeing a bit of a turnaround here. Finally, the buyers are starting to step up, not with huge volume, which I don't love. I'd like to see a bit more of that institutional involvement. But regardless, we are getting a bit of it's kind of a triple bottom, almost a quadruple bottom pattern here. And we broke through last week, nothing but green days last week, which you love to see if you're bullish on a stock, and a really nice close near the top of the week's range. So that was a nice week for Beyond Meat. Coinbase, we'll check out again, and this is a weekly chart, so it's a little bit messy, but pretty much encapsulated all of the losses of the previous week in last week's trading, an outside, or almost an outside week. If we look at this on a daily chart, we noted last week that we had a little bit of a break of this trend line. That break continued, and it's run right into, look at that, that's technical levels working nicely, run right into this resistance we had here. So we'll remove this now. We drew this red line last week, and I've just checked for the first time today, and the sellers came right back in there, which is where they got involved last time too. So this is the level to get above now for the bulls of Coinbase. If we do get that, perhaps we'll see a move back up to $80. On the flip side of that, if the sellers do come in numbers here, heading back down to 45. So it'll be interesting to keep an eye on that today and see if we can get above it. Weekly chart of Costco, again, we'll kind of speed through a few of these. We got this nice close above this resistance level here, which was capping gains for the last month or so. Again, a pretty green week. We gapped up on Friday as well. So a nice move last week actually. We had this doji the week before, showed a bit of indecision, but the buyers were really in control and they forced it through last week, so that's nice for Costco. Disney in a really tight range on a weekly chart. This is the last month's trading, so we can actually, if we jump to a monthly chart, well, it's kind of overlaps over 2 months, but you get what I mean. These last 4 weeks here are really tight. I'd still be expecting this to move a bit lower, possibly down to the 61.8 fib, which we have drawn on. GME, we noted this last week as well. We had the announcement of a stock split, which comes up at the end of the month. With that led to a really nice move on the Thursday, and a little bit of indecision after gapping down on the Friday. So we'll keep an eye on that one, see how that gets on. We'll finish with Google, because Google had a really good week. I think it was off about 10%. But some weird price action here. You can see we had this 3 weeks ago. We had a really nice bullish candle, hit the resistance. The bears came back in force with an bearish outside week, But then the bull said, if you can do that, we can do it better, and came back with a bullish outside week. So it's been very up and down, very choppy on Google. Potential for some nice kind of trading at the ends of these ranges here. Haven't got this drawn on, but there's been a nice support level which has been holding up obviously quite nicely. We are still at that resistance for me. Feels a little bit overextended after this powerful move to the upside, so it wouldn't surprise me if we did get a bit of resistance early into this week. But if we do get a break, it's that 50% fib we're targeting there from the entire move. And that coincides with a fair bit of support that we had previously, which will turn into resistance. So keep an eye on that for Google. But overall, last week, as we all know, was pretty strong. Let's see if we get any follow through into this week.
Lovely. Great job, Jamie. Thank you very much. So we can move this on now to the next stage of our morning videos, which is the gun to the head trades, or the gun to the head challenge. So basically each of us pick a live trade idea on the video. We must have stops and targets on these ideas. Risk management, of course, very important. All of these ideas that we pick are placed at market, so there's no sort of hidden tricks here. We are just picking something that we fancy based on short-term charts and hope that it makes some money between now and 9 p.m. UK time when we cut them off, or they'll expire when the stops or the targets are hit. So we've been doing this for some time now and built up a decent-ish track record from doing it as well, which we publish on our blog on the website every day. But the trade ideas that we do on a daily basis are added to our TradingView profile. So if anybody wants to check them out, make sure we aren't cheating, then please feel free to do so. They're all time-stamped and they're all live here for everybody to check out. Now, sadly, on Friday, things didn't work out too well for us. Jamie was stopped on dollar index, despite overall it looking very strong and remaining very strong. That's sometimes the way it goes. So unlucky there, buddy. And I was stopped out on Euro Yen looking for a break lower, which didn't come. I kind of got faked out a little bit there. False break lower, and it ended up getting stopped. So sad times, but that's the game, I'm afraid, and it is a challenging market at the moment, and it's always challenging trading. So yeah, that's just the way it goes. So I'm looking at something today. I've got here the US 2000, the Russell 2000, which is the small cap index in the US. It's quite an interesting market. I mean, if we look at it on the daily charts, there's really not much that interests me at all, if I'm honest. And I was just having a flick through the intraday charts, and this one cropped up on my screen and looked quite interesting. Let's just actually have a look at this, if there's any supports along here. So arguably, you could say we're into a bit of a support zone here. I haven't actually looked at the fibs here either. And hopefully this is going to marry up quite nicely for me. And it is, look, the blue line in there is the 50% fib. So we've got a lot of support levels potentially on offer here, which looks quite attractive, I think, on the daily chart. So that's quite interesting. But then what it was that attracted me this morning was the hourly chart, actually. I was just looking at this, potentially rounding off, forming a bit of a bullish channel, potentially. A bit of a pullback in the last couple of hours towards support here, which seems to be holding. So I was going to buy it at 17.52. That stop loss is quite tight, so let me just give ourselves a little bit of room. I'm going to be targeting a move up to these previous swing highs here from the 28th of June. That's at 17.94. And I've got a stop loss at 1741.5, giving me a potential 4.15 R on the Russell 2000 today. So I will get that published. If anybody wants to check it out, those prices have changed slightly, so I'll just update those. So yeah, that's my trade of the day. What you got, Jamie?
Yeah, I like the look at that one. That's looking nice. I am looking at a similar pattern to one I looked at last week, actually. A break of an ascending triangle. This is the US dollar against the Japanese yen. We've seen obviously a lot of yen weakness, a lot of dollar strength. So I think that it obviously helps to be on the right side of that pairing. So looking for longs, we've had this resistance which is held up on a 4-hour chart. We got a bit of a break in the previous 4-hour session, that 2 till 6 session. And what we're having now is a little bit of a the sellers are stepping in. So this could be a bit of a fake out, or it could just be a bit of a retest of the level. So I'm going to hope it's a bit of a retest of the level and prices will move higher after. So we're going to look to get long on the US dollar against the Japanese yen at current price, which is 136, 136.76. There we go. Keeping our stop just above this, below this candle. Keep it pretty tight, but you want to give it enough room to breathe. And with the target, I picked this target more because you can kind of see that this is a bit of a, sorry, it's a bit of a tangent. You've got a bit of a channel here as well. You've obviously got the higher lows, but a channel. So I just took the measured move from the support to the resistance, and that's what we're targeting up here. So targeting the 138.50, giving us a nice 3.05 risk reward there. So hoping that the dollar strength continues and the yen weakness continues.
Like that. Okay, let's move it on to the key data points for the day ahead and for the rest of the week, actually. So at 3:15 today UK time, we've got the Bank of England Governor Andrew Bailey speaking. He could give us some indication on what he's thinking about monetary policy in the UK and what we can expect with regards to interest rates. Throughout the rest of the week, we've got some key data points to keep an eye out for as well. First up, on the 13th of July, we've got the latest read on inflation in the US, the consumer prices. That will obviously be well watched. Has inflation peaked, or are we still in the process of seeing that move higher? On the same day, we've got the Bank of Canada interest rate decision. So in line with everybody else at the minute, central banks wise, we could be expecting to see an interest rate hike there. In China, we've got the latest GDP report on the 15th. And at the same time, we've got the US retail sales and the University of Michigan Consumer Confidence Index. So a fair amount to keep us interested this week. Also, on the corporate side of things, we sort of move into earnings season in the US as well for the latest round of numbers from some of the big companies in the US. And if we take a look at Tuesday, we've got PepsiCo reporting. And we can see previously what they've done. We'll probably have a bit more of an in-depth look at them tomorrow. On Thursday, we've got JP Morgan Chase, so the bank stock starting to report. And then on Friday, we've got Citigroup. So some big names coming out this week to kick off the earnings season. And then the week after, we can start to see a lot more blue on our corporate calendar, which indicates there's going to be a few more names. So we've got Bank of America, IBM, Johnson & Johnson, Novartis, Abbott Laboratories, AT&T, Philip Morris. So yeah, a good few names without really moving into the tech space, which will come by the looks of things a couple of weeks afterwards. So yeah, we'll kick off earnings and see how that goes and see if it has any market moving ability in the next week or so.
Nice, look at that.
Cool. Anything further to add, Jamie?
No, I think we're all good, aren't we? I've always said I enjoy earning seasons. We get some interesting moves and some big names. So looking forward to getting that underway. But just yeah, same as always, stay safe and make sure you're managing your risk if you're trading.
Absolutely. Spot on. Okay, let's wrap it up there. We'll be back tomorrow. And until then, have a great day, everybody. Goodbye.
Bye.